Hello everyone, welcome to today's session on goods and service tax filings. Today we are going to learn about the place of supply rules under the GST. In this session we are going to cover what is place of supply rules and why is it important. Then we will see what are the different rules of place of supply in case of goods and then in case of services. We will also see some special transactions like imports and exports where place of supply rules are to be applied very cautiously. So before we proceed with today's session, let us quickly see what we have done in our previous session. So in our previous session, we learned about the time of supply of goods and services under the GST. So point at which the supply is considered to have been made is known as the time of supply. It is important for determining when the GST becomes payable. We learned about the importance of time of supply under GST as it impacts the tax liability and it has a role in determining the applicable tax rates. Then we learned about the time of supply in case of goods and in case of services. Also, we learned about the time of supply in case of continuous supply of goods and continuous supply of services. Also, we learned the time of supply in case of reverse charge under goods and under services scenarios. Then we learned about the time of supply in case of vouchers where goods and services are supplied through a voucher. Also, we learned about the different scenarios in case of changing tax rate where the supply is before the change in rate of tax or where the supply is after the change in rate of taxes. So now let us proceed with today's session. So what is place of supply rules under GST? The place of supply under GST is the location where goods or services are consumed, that is the recipient's location. This is the general rule. It determines whether a transaction is classified as intrastate or interstate, impacting the tax applicability. That is, if CGST and SGST or IGST has to be charged. So understanding this concept is crucial for correct tax compliances under GST framework. So the place of supply rule helps in determining whether IGST or CGST plus SGST is to be charged. It helps to identify the destination state for tax distribution, and the provisions are section 10 to 13 of the IGST Act that contains the place of supply rules. So the concept of place of supply under GST is fundamental to ensure accurate taxation and compliances. It determines whether a transaction attracts CGST, SGST or IGST, directly impacting the tax jurisdiction and revenue distribution among the states. So now let us understand why place of supply is important in GST. So the place of supply under GST is the location where goods or services are ultimately consumed. It determines whether a transaction is classified as intrastate or interstate, impacting the tax applicability. Understanding this concept is crucial for correct tax compliance under the GST framework. So the concept of place of supply plays a crucial role in ensuring that the GST system works smoothly. For business owners, understanding this concept is essential because it directly impacts how taxes are charged, filed and paid. So, role in determining CGST, SGST and IGST. The GST framework divides taxes into CGST, that is the central tax, SGST, that is the state tax, and IGST, which is the integrated tax based on the location of buyer and seller. So the place of supply determines which tax is applied to a transaction. For example, for intrastate supplies, CGST and SGST is to be applied, and for an interstate transaction, IGST has to be applied. Then tax jurisdiction and revenue allocation. The place of supply is a vital for identifying the tax jurisdiction, which determines where the tax revenue will go, that is, to which state the revenue will be allocated and which government, central or the state, gets the share of the revenue. For businesses, it ensures fair distribution of taxes. So revenue from GST is allocated to states where the goods or services are ultimately consumed. This avoids the double taxation or disputes between the states for sharing of revenue. Then compliance with legal requirements. Failing to identify the correct place of supply may lead to audits, penalties and dispute with the tax authorities. So for business owners, accurately determining the place of supply has many practical implications. Some of them may be avoiding penalties and legal disputes, like misclassification of place of supply may lead to incorrect tax payments, then notices from tax authorities and even fines. By getting it right, business can avoid such risks. Then claiming of input tax credit. So proper identification of place of supply ensures that business can claim input tax credit seamlessly. If the place of supply is wrongly determined, then input tax credits may be denied, leading to higher cost of product. Then for maintaining transparency and compliances, accurate records of place of supply build credibility and smooth transaction with tax authorities. This is especially important for businesses operating in multiple states or multiple countries. Then impact on pricing and contracts. The type of GST applied, that is CGST plus SGST or IGST, can affect the pricing and tax burden in contracts. Understanding the place of supply helps in drafting contracts that are clear about the tax liabilities and the taxable events. So let's take an example. Say if you own a e-commerce business in Karnataka and sells the product to customers in Tamil Nadu. Since the transaction is interstate, IGST has to be applied. Now, imagine if you accidentally classify it as an intrastate transaction and paid CGST and SGST instead. This misclassification could lead to double taxation for the buyer and tax penalties for the business by the authorities. So understanding the role of place of supply ensures that such mistakes are avoided and the taxes are in compliance with the GST rules. So the determination of place of supply is guided by specific factors which may include location of the supplier and the recipient, whether both the parties are in the same state, or different countries affects the tax type to be charged. Then the nature of transaction, whether the transaction involves goods or services. For goods, physical movement often determines the place of supply, while for services, it's usually the recipient's location. Then mode of delivery also determines the place of supply. Transactions involving movement, installation or delivery to a third party may have specific rules, such as in bill to ship to scenario, where the billing is done to the buyer but the product is shipped to the third party. Then specific provisions like those tied to immovable properties or events related activities have a unique rules based in this nature. So there are differences between the place of supply rules in case of goods and in case of services. For briefing, we have goods and services. So movement of goods, the place of supply is where the goods are delivered. In case the goods do not involve any movement, then the location of goods at the time of delivery is the place of supply. In case of special transactions like bill to ship to, the place of supply is based on the buyer's billing location. Similarly, in case of services, the general rule is the place of supply is recipient's location, whereas for specific services like for immovable property, the place of supply is the property location. We'll cover this in detail in our upcoming slides. In case of domestic versus international transactions, Section 12 deals with domestic transactions, whereas Section 13 deals with international transactions. So domestic transactions, that is Section 12, applies when both the supplier and recipient are located within India. The rules are designed to allocate the taxes between the center and the state based on the consumption. In case of international transaction, that is Section 13, these apply when either the supplier or the recipient is located outside the India. In such case, the place of supply is generally the recipient's location, but exceptions do exist for services tied to immovable property or performance in India. So now let's move ahead. Let us cover now Section 10, that is place of supply in case of goods. So the place of supply rules are different in case where goods involve movement and where goods do not involve any movement. So the transactions which involve the movement of goods, if the goods are moved, example, transporter or by using the courier services, then the place of supply is the location where the goods are delivered to the buyer. For example, a seller in Maharashtra ships the goods to a buyer in Gujarat. Then the place of supply in this case will be Gujarat and IGST will be applied. Then we have transactions where no movement of goods is involved. So if goods are sold without movement, that is, for example, at seller's premise or on-site delivery, then the place of supply is the location of the goods at the time of delivery. For example, a factory sells equipments located in its warehouses in Delhi. So the place of supply in this case will be Delhi and CGST and SGST shall be applied. Next we have transactions like bill to ship to transaction. In bill to ship to transaction, goods are shipped to a third party on the instruction of the buyer. In such a case, the place of supply is the location of buyer who placed the order. For example, a seller in Karnataka ships goods to party C in Tamil Nadu on instructions from party B in Maharashtra. So in this case, the place of supply is Maharashtra and IGST shall be applied. Then in case of installations or annual maintenance services or quarterly maintenance services, the place of supply will be the installation or the site where the servicing has been done. So next we have imports and exports. So in case of imports, the place of supply is the importer's location and IGST shall be charged. In case of exports, the place of supply will be location outside India and it will be treated as zero rated sales, and by default it will be considered as a interstate supply, and since it is zero rated, no GST shall be charged. Again we have in case of export options to either pay GST upfront or we can export without paying GST by opting for LUT, that is letter of undertaking or a bond. Although the international transactions, that is imports and exports, where either of the supplier or the recipient is located outside India, the place of supply is generally the recipient's location, but exceptions do exist for services tied to immovable property or performance in India. So moving ahead, Section 7 versus Section 8. Section 7 deals with interstate supplies, whereas Section 8 deals with intrastate supplies. So in case of buyer and seller residing in different states, then it will be considered as interstate supplies and IGST will be charged. If the buyer and seller location are in the same state, then it will be considered as intrastate supplies and CGST and SGST will be charged. SEZ and special territories, that is special economic zones and special territories, have exceptions in case of supply, place of supply rules. So let us now see some special cases in case of goods. So in case of bill to ship to transaction, the place of supply is the buyer's location, that is in case where goods are shipped to a third party on instruction of the buyer, then the place of supply is the location of the buyer and not the third party. Then we have e-commerce operators. In case of e-commerce transactions, IGST shall be applicable as it is treated as a interstate transaction. Then stock transfer to branches, sending goods from the one branch to another branch is treated as a supply under GST, and the place of supply will be the location of the branch. Then high sea sales. High sea sales, what is high sea sales? So basically high sea sales are sales in the course of import. In such a case, sales takes place by transfer of document of title of goods before the goods are cleared from the customs. In case of place of supply rules, high sea sales are treated as exports. Then let us move to place of supply in case of services. So for services, the place of supply is typically tied to the recipient's location, but it does vary in specific cases. So in general, the place of supply is the location of the service recipient. For example, a consultancy firm in Rajasthan provides services to a company in Uttar Pradesh. The place of supply in this case will be Uttar Pradesh and IGST will be charged. So let us go to the slide. To registered person, that is supplies executed to registered person, the place of supply will be the recipient's location. To unregistered person, that is supplies executed to unregistered person, the place of supply will be the address on record, that is the billing address. And if no address is available, then the supplier's location will be the place of supply by default. So there are specific cases or specific services as per section 12 which governs the place of supply in case of services. So in case of immovable property related services, the place of supply is the location of the property, that is where the immovable property is situated. Then in case of restaurant services, the place of supply will be the place of service, that is the restaurant. Then event related services, the place of supply is where the event is held. Then transportation of goods or passengers, the place of supply is where the goods are boarded or where the passenger embarks. So this we have already covered. Goods transport agency, place of supply will be the recipient or origin based on registration. Passenger transport, place of supply will be boarding or recipient location. And in case of banking, telecom, insurance services, the place of supply is the billing address of the recipient or the location of the fixed line or device. Similarly, in case of banking and financial services, the place of supply is the location of the recipient's account. Then multiple location, or in case of any ambiguities, when the services are supplied to multiple locations, the place of supply is determined based on the predominant use of such services. Then we have cross-border services. Section 13 deals with cross-border services. So as per section 13, if one party is outside India, then the general rule is that the place of supply is the recipient's location. In case of intermediaries, the place of supply will be the intermediaries location. And similarly, in case of online information and data access and retrieval services, the place of supply will be the recipient's address in India and IGST has to be charged. So moving ahead, let us take some real life scenarios. Hotel in Goa for Mumbai company, then the place of supply will be Goa, that is the address of the immovable property. Then EdTech, that is education tech exports to Dubai. In this case, the place of supply will be Dubai as it will be treated as export. Then SEZ to DTA, this will be SEZ, that is special economic zone to domestic tariff area interstate transaction, it will be treated as export and hence IGST will be charged. Then Netflix giving services to India, then the place of supply is India and IGST shall be charged by the Netflix in company by taking a registration under the NRTP, that is non-resident taxable person scenario. So to summarize, in case of goods, we have to see the delivery, installation and the movement logics. In case of services, the place of supply will be the recipient location or we have to apply specific rules for specific transactions. Then for exports, these are zero rated and in case of imports, IGST has to be charged. Then we have to apply the correct place of supply rules to avoid ITC mismatch and penalties. So the final checklist: review supplier and recipient state, verify the type of supply, that is goods or services, and apply correct rule, that is section 10 to section 13. So to conclude, there are challenges in determining the place of supply. The place of supply rules under GST are critical for determining the correct taxation, that is CGST, SGST or IGST, and ensuring the compliances. However, applying these rules in real world business scenarios often presents certain challenges due to which there are high chances of errors and misclassification. So, complexities of transactions, varying interpretation and sector-specific minute differences pose challenges in determining the place of supply. So, there are certain challenges like interpretational ambiguities in section 12. So, misinterpretation of provisions, especially in multi-state transactions, lead to disputes and penalties. Then complexities in cross-border and interstate transactions. It poses challenges in identifying the correct place of supply for international or interstate transactions, especially with intermediaries. Then we have industry-specific challenges. So, sectors like e-commerce, telecom, IT and logistics faces unique issues due to complex operations and varied transaction types. Then we have ambiguities in case of multi-location services. So it is difficult to determine the place of supply for services delivered across multiple client locations. Then overlapping jurisdictions and taxation. Disputes between states over tax jurisdiction leads to compliance delays and potential double taxation. Then multi-party transaction, confusion in bill to ship to cases with multiple parties involved in different states. Other challenges are frequent amendments and lack of clarity. Regular changes and modifications to GST rules create challenges in keeping up with the compliance requirements. Also, data and documentation issues, inadequate or inaccurate records results in errors in determining the correct place of supply. So by addressing these challenges with robust system, proper documentation and expert guidance, businesses can ensure smooth and fair compliances and minimize the disputes. So best practices for businesses. Accurate place of supply determination trains the team to understand GST provisions and apply the correct place of supply rules for goods and services. So if the team is trained, then there will be least possibilities of errors and misinterpretation in determining the place of supply. Then maintain robust documentation ensures all transactions records including invoices and agreements along with contracts clearly specify recipient location and delivery details. Then leverage technology and automation. Use GST compliance software for updated tax calculation and reporting to reduce the manual intervention and manual errors. Then regularly audit GST process, conduct internal audits to verify place of supply classification, tax payments and input tax credit claims. Then stay updated with GST amendments, follow the official updates and changes to GST rules, especially those impacting the place of supply. Then establish clear internal processes, define the standard operating processes for handling complex transactions like inter-branch transfers or cross-border services. Then seek professional guidance, engage tax consultants or advisors for clarity on complex or multi-party transactions. Then categorize transactions clearly, distinguish between goods, services and mixed supply to ensure correct place of supply determination. Then use customer communication for clarity. Collect precise information from customers about the delivery location and billing addresses. Then invest in employee training, provide ongoing training to staff on place of supply rules and compliance requirements. So these are the best practices for business to stay compliant with the place of supply rules. So that's it for this session. We'll have few examples on the place of supply and we'll conclude this session. So let's move ahead with the examples. So first, supply of goods with movement. This is covered by section 10 subsection 1 clause A. So a furniture manufacturer in Pune, Maharashtra sells a sofa to a customer in Bangalore, Karnataka. The sofa is transported by the manufacturer from their factory in Pune to the customer's residence in Bangalore. So the place of supply in this case will be Bangalore, Karnataka. According to GST place of supply rules, when a supply involves the movement of goods, the place of supply is the location where the movement of goods terminates for delivery to the recipient. So since the supplier, that is resident in Maharashtra, and the place of supply, that is the recipient location is Karnataka, are different, hence IGST will be charged. Next we have services related to immovable property. An architect based in Delhi provides services, designing services for the construction of a hotel building located in Shimla, Himachal Pradesh. The client for whom the services are being rendered is located in Mumbai, Maharashtra. So in this case, the place of supply will be Shimla, that is Himachal Pradesh. So as per the place of supply rules, if the services are directly related to immovable property, the place of supply is the location of the immovable property. Even though the architect and the client are in different locations, the immovable property is located in Himachal Pradesh. Since the supplier based in Delhi and the place of supply is Himachal Pradesh are different states, IGST will be applicable. Next we have service provided on board a conveyance. So a passenger boards a train in Chennai, Tamil Nadu traveling to Hyderabad, Telangana. During the journey, the passenger purchases a meal from catering services on board. The catering services registered office is located in Bangalore. And the food was loaded on the train at Chennai. So the place of supply will be Chennai, Tamil Nadu. So as per the place of supply rules, if services are supplied on board a conveyance, the place of supply is the first scheduled point of departure of that conveyance. Hence, in this case, The supplier is located in Karnataka and the place of supply is in Chennai, Tamil Nadu. Hence, IGST will be applicable. Then we have a bill to ship to transaction example. A dealer in consumer durables registered in Mumbai, Maharashtra receives an order from a customer in Delhi. The customer instructs the dealer to directly ship the goods to the warehouses located in Bangalore, Karnataka. So the place of supply in this case will be Delhi, where the customer who gives the instruction to deliver is located. So in a bill to ship to scenario, the place of supply is the location of the buyer. That is the person who places the order and instructs the delivery to the third party. And it's not the location where the goods are actually delivered. So in this case, since the supplier based in Maharashtra and the place of supply, that is Delhi, are in different states, IGST will be charged in this example. Next we have transportation of goods, that is covered under section 12 subsection 8. So a logistic company located in Noida, Uttar Pradesh is hired by a textile manufacturer registered in Ahmedabad to transport a consignment of fabrics from Noida to a dyeing agent in Surat, that is in Gujarat. So in this case, the place of supply will be Gujarat. So as per the place of supply rules, for transportation of goods provided to a registered recipient, the place of supply is the location of the recipient of services. So here in this case, since the supplier based in Uttar Pradesh and the place of supply, that is Gujarat, are in different states, IGST will be applicable. So that's it for this session. Thank you.